Welcome back to yet another exciting episode of Forex on Demand. Today I'll be presenting you probably a strategy that most of you have been waiting for, a strategy to catch spikes, guys. You'll be catching spikes left, right, and center with this strategy. This comes after most of you being asking like they need a reliable strategy to help them catch spikes and all that, and we've been searching and looking around on what can we do to find a strategy that will help the community catch spikes. So if you are new to this channel, welcome to the channel, and please don't forget to subscribe. Don't forget to hit that bell button because you'll get notification whenever I post a video. And these videos I post free strategies, I post tools that will enable your development in trading in general. So with that being said, I often get questions like what's the zoom level, what are the settings for these strategies, which is an indication that people don't watch the video in full. They just rush to the end of the video, get settings, and then they'll blow their accounts without, because they don't even know how the strategy works. And please guys, I urge you, watch the video till the end. Do not skip anything because you're gonna miss an important point. It takes that slight point you missed for you to blow your account. And then there are people who be asking me about zoom levels all the time, zoom levels, yet I mention it a million times in my video. So please guys, I urge you, listen attentively, do not skip, watch the entire video because you're gonna miss out. So I'm gonna start by telling you guys the zoom level. The zoom level for this strategy is the last smallest zoom level you can get. The smallest, guys, the smallest. You can see that how small mine is. This is the zoom level. This is the zoom level. So yeah, let's get to the strategy. So how do you catch spikes with this? So guys, follow the red circle and listen attentively. Follow the red circle. The first thing you need to do is to look into your main chart and see if you are getting the market crossing below that black MA on the main screen. It should cross below. This is for crash 1000. For boom 1000, that means we'll be looking for what? It will be crossing above. Now, since this is crash 1000, we'll be looking for points where the market crosses below the black EMA right there. And the second confirmation is you'll be looking at your indicator window 1 right there at the circle. You can see that the main crossovers there. We have the blue EMA, is there some like pink and purple EMA crossing below the red and the black and the yellow. So that's what you need to look for. And also the blue EMA should be above. The blue EMA should be above these two little EMAs, the pink and the purple one. Then you would know you're on a good track. So then we move on to the third confirmation, which is on the indicator window 1. Right here, guys. Right there, indicator window 1. The red and the blue EMA needs to be crossing below that black EMA, just like it's happening on the main chart. It needs to be like that. And then that's your confirmation, guys. That's where you take your sell. And then you will write this to, or here the market is still running. So you can see this, the current crash 1000 just has been falling all morning. So where do you exit? Let me go back and find you guys an exit. So you would look for something like this to exit. To exit, you look for something. The market will cross up the black EMA, and then here you would see there'll be that crossover, and then here there'll be this crossover. It's just the opposite of how you confirm the spikes. Now your exit point will be the opposite, where now you'll be confirming that the trend has changed. Now we are changing direction, we'll be buying. That's your exit point for spikes, guys. Please listen attention. That's your exit point. Here you can choose whether you want to follow your normal trading plan that you use on daily basis, or you get 15 to 20 candles, or where you exit at levels 45. Where you exit at levels 45 right here. It's up to you. But this one is a swing strategy, guys. You can hold this for longer. You can hold this for longer. Let's look for another confirmation. Let's look for another confirmation. Let's come back. Let's keep scrolling. There you go. There you go. You see, the market below the market crossed below. Sorry about that. The market crossed below the black EMA here. The blue, pink, and purple crossed below the black and yellow. And then here again, we see a cross below the black EMA. And one thing you need to keep in mind, guys, one thing you need to keep in mind, this has to be coming from a sell zone. It has to be coming from a sell zone. It doesn't just happen anyway. If it's coming from the sell zone, like where the arrow is pointing, and then it's gonna go and cross our black EMA right there, then you know you have a confirmation. So this is 1, 2, 3 confirmation. This is like a 3 confirmation strategy. It should be like a 3 confirmation strategy. With this, I can assure you your trading will drastically improve. You will never go wrong with this, guys. You'll never go wrong. So now let's look for a buy setup. Like how is the buy setup like? Here's one, guys. Here's one. The buy setup for Crash 1000 would be something like, see the market, sorry, I'm looking for a circle, not you, arrow. What are you doing there? Yes, we're looking for this area here. The market has crossed above the black EMA right there, and then also here the pink, the purple, and the blue EMAs have crossed above the red, I mean the black and the yellow, and the blue EMA, guys. The blue EMA is below the purple and the pink. That's a good sign. That's a good sign. And on our second indicator window, we see here the red and the blue EMA crossing above the black EMA, and then this blue and red EMAs, they're coming from a point of oversold. They're coming from a point of oversold. They hit our oversold zone and then bam, they went up. So where do you exit now? Where you're gonna be exiting is when you be confirming your spikes. That's when you be confirming your spikes. Where will you be exiting? 1, 2, 3. These are the confirmations for a buy. For a sell, guys. These are confirmations for a spike. Then this is your exit point for the sell we took earlier. For the sell we took earlier. This is like you'll be holding this for a very, 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 very long time. This works both on boom 1000, crash 1000, boom 500, crash 500, you name it. You can use this strategy for all those, guys. You can use the strategy for all those. So with that, guys, one thing you should need to note is that this strategy is on M5. Is on your M5 time frame. You use it on your M5 time frame. You see, hence we can hold this for an extended period of time. So with that, guys, if you are new to this channel, please don't forget to subscribe. Don't forget to hit that bell button, because you'll get notifications for exciting videos that I'll be sharing week in, week out. And trust me, this will boost your trading ability and to make you highly profitable. So let's go and look for, let's see how boom 1000 would be with this. Let's see how boom 1000 would be with this. Yes, here's another confirmation just right here. Like we missed it a few hours ago. Just happened a few minutes ago, actually. Yeah, if not hours. So here it is, guys. We've got the market crossing above that moving average on the chart, and then we have the purple and the pink and the blue crossing above the black and the yellow, and then we have on the indicator window 2 the red and the blue crossing above the black after it comes from after it reached our overbought, sorry about that, I mean oversold zone. Then you know you've got a confirmation right there. That's how you even catch spikes on boom, guys. You see, with this one, you would have entered the market again right there, guys, right there. So let me not make this video any longer. Let me share with you the settings quickly. So on the main chart, we have one moving average. It's EMA period 48, shift 0, method smoothed, guys. This is smooth. It's very important to get the method right and apply to close. The style, you can choose any style you like. I chose black because my background is white. And then we'd move on to indicator window 1. We have our everyday stochastic oscillator with K period 1, D period 1, slowing 1, price field, low high, method simple. The main and the signal are white because my background is white and we don't want those. So if your background is black, make sure they're black. And then we get our levels right there. We've got levels 90, 10, 85, 15, 80, and 20. Just like that. Just like that, guys. So the next one would be the moving average. The first moving average is the purple one, is period 5, shift 0, method exponential. Method exponential. Apply to close. The style, you can choose any style you are comfortable with. And then the second one would be period 8, shift 0, method exponential. Apply to close. The style, choose any style you like, guys, any style you like. The third one would be moving average 21, shift 0, method exponential. Apply to close. Even the color, like I said, choose any color you like, guys. The fourth one would be moving average 200, sorry, not 20, 200, shift is 0, method is linear weight. You see, the method is linear weight, guys. Get that right, linear weight. Apply to close. The style, 4 pixels yellow, but you can choose any color you want and any style you want. The last one on the indicator window 1 is our moving average 100, shift 0, method smoothed. Apply to close. The style, like I said, choose anything you like. Then we move on to the last indicator window, which is indicator window 2. Indicator window 2, we have the relative strength index with period 1, apply to close. Style 1 pixel, make sure it's the color of your background. The only thing we're looking for here are the levels 90, 80, 50, 20, 10, 45, and 55, guys. And 55, guys. And then we'll be adding the last 3 moving averages. This is a moving average period 10, shift -8, method simple, apply to close. The style, again, choose anything you're comfortable with. I'm using blue. And then we have this the second one is period moving average period 13, shift -9, method exponential, apply to close. The style also is 3 pixels and red, but you can choose any color. Last but not least, we have the moving average 200 with shift -9, method linear weight, apply to previous indicators data. The style is 3 pixels and I chose black. You can choose anything you like. And then you will have a setup like this, guys. And then you will have a setup like this. So after you have a setup like this, then you know you are ready to kill the market. You are ready to kill the market. But I would like to give you one more advice, guys. There are 2 videos I've shared earlier about support and resistance and about trading with the trend line. When you can do that and apply those support and resistance and draw your trend lines, and then you combine it with this strategy, trust me, guys, you will never go wrong, because the support and resistance and the trend lines, they'll give you psychological points where you would know and anticipate a market reversal or a market continuation. So please, before if you can start testing this strategy out, go to those 2 videos, watch them, and then you draw your support and resistance and use it in combination with this strategy. And guys, I promise you, you will never be profitable as you will be after you do these 2 things I recommend, guys. So Go watch those videos, draw those support and resistance, draw those trend lines, apply with this strategy. You'll see wonders. You'll see wonders. So lastly, if you are new to the channel, please don't forget to subscribe. Don't forget to hit the bell button. Don't forget to share with your friends. And let's have a discussion on the chat section, guys. What do you think of this strategy? If you have any questions, throw it on the chat section, on the comment section below. I'll get back to you as soon as possible. I'll get back to you as soon as possible. So, with that being said, bye bye, guys.